Now that it's been more than 4 weeks of COVID-19 suppressed demand, what we're seeing in Orange County is a true depiction of the number of pending sales that will take place under the stay-at-home circumstances. There's a broad housing market interruption due to the coronavirus that has had a major impact on the velocity of the market, demand, and the supply of homes, the active inventory. Both have been impacted significantly. Yes, demand is ultra low, but so is active listing inventory. There's been a slowdown in buyers' offers and fewer homeowners are putting their house on the market. Hi, Adrienne Marks coming to you from beautiful San Clemente. Today I'll be giving an update on the Orange County real estate market and how the coronavirus has affected housing sales since the shutdown. My goal is to help keep you informed on all things real estate, and I put out new videos regularly so you can keep your finger on the real estate pulse. If you like what you hear, be sure to subscribe to my channel and don't be shy about sharing this information with your friends and family. Now let's dive right in. As a result of everyday life grinding to a halt, demand dropped by 55% in the past month. By demand, I'm referring to the number of houses that went under contract. You'll also hear that referred to as gone pending. These low demand levels were last seen in 2007. Another big change since the stay-at-home order on March 19th is the number of homes placed on the market dropped by 52% compared to the prior 5-year average. As a result, the active inventory has only grown by 185 homes in the past 4 weeks, a 4% increase. While demand is at Great Recession levels, the inventory isn't growing like it did in 2006 through 2008 when it reached nearly 18,000 homes. Today we only have 4,300 homes on the market. And looking at the county's different price ranges and detached versus attached, the entire market has been impacted. Yet there are a few ranges that are still functioning well. They have evolved from extremely hot to one that still favors sellers but is a bit slower. I'm going to walk you through the details of this chart. First, let's talk detached homes. Everything below $1 million lines up at least slightly in the seller's favor. Between $500,000 and $750,000, the local housing market's detached homes are obtaining more offers than any other price range, and sellers are getting to call most of the shots. In that price range, you can expect it to take about 49 days to sell, which is a seller's market. Now, in comparison, 4 weeks ago, it was at 25 days. So it's taking twice as long to sell today in that range as it did 4 weeks ago. For detached homes above $1 million, the market slows down considerably, leaning in favor of buyers. Anything above $2 million has nearly ground to a halt. Another interesting thing to look at is the percentage of current inventory and demand the different price ranges have. If you have a house valued between that prime range, you're sitting pretty as a seller. These houses are selling the fastest and represent 14% of the 4,344 houses for sale. But look at the demand. It has the most demand over any other price range. A close second is between $750,000 and $1 million with 33% demand and 23% of the active inventory. The sellers hit the hardest right now are detached homes above $2 million. It doesn't mean the house won't sell. You just need to adjust your expectations to what's happening in the market and know that it will likely take nearly a year to sell, if not longer. Now, if we look at attached homes, the best range is between $250,000 and $500,000, with the sellers being slightly favored and taking about 85 days to sell. In contrast, it was at 34 days 4 weeks ago. The $500,000 to $750,000 price range for attached homes is balanced, and all other attached ranges, including those below $250,000, favor buyers. For attached homes above $1 million, the market is extremely slow. So what does this all mean if you're a buyer? With homes taking much longer to sell than normal this time of year, you might be able to get some concessions from a seller, but don't expect to get a lowball offer accepted. At this point, values aren't changing much at all. Work with your agent to come up with a strategy to present a market value appropriate offer while also asking for some concessions the seller might be willing to give. Now, what about sellers? I hate to say it, but until the shelter-in-place order is lifted, buyer activity and showings will be minimal. Don't get me wrong, Houses are going under contract every day and closing escrow every day. It's just going to take longer than you planned if you put your home on the market last month. The fact that there are 2,500 less homes now than this time last year will help maintain market values for now. A tough decision sellers are faced with is whether or not to put the house on the market during the shutdown. If the house is vacant, I say it's a no-brainer. Get it out there, especially if you're in that prime price range. If you're still living in the house, you need to consider your comfort level with people coming to see the house. There are ways to work around this and limit who's coming in. If you think you might want to put your house on the market and want to know alternative methods of marketing your house, give me a call and I'd be happy to share some of the measures that can be taken to minimize foot traffic through your home. There's no better time than now to seek out a real estate professional who's highly trained in digital marketing to help you with just that. Whether you're selling or in the market to buy during this pandemic, one more thing to be aware of is a new advisory called the Coronavirus Property Entry Advisory and Declaration. And it's a form provided by the California Association of Realtors that needs to be signed by sellers, by agents, and any buyers entering a property for sale. Now, just to give you a quick idea of what's happened in the last couple of days, 52 homes went on the market on April 20th, ranging from $299 all the way to $5.8 million. 14 of them, or 26.9%, are in the hot price range of $500,000 to $750,000. What does this tell you? Well, that people still need to move for a variety of reasons. Maybe a divorce, a bankruptcy, selling the family house, moving out of state, and sadly there's going to be some people who need to sell because their business has been shut down and the help that's available just isn't enough to keep things moving. Whatever the reason, people are still selling and buying. By the way, last week's video was about the forbearance program under the CARES Act. If you're out of work right now and struggling to pay your mortgage, this is a must-watch video so you have a good understanding of the program and what happens when it's over. So if you haven't seen it yet, definitely check it out. I'll put a link at the end of this video. I really appreciate you tuning in today. Remember, I'm here to help, so if you have any questions or just need some friendly real estate advice, I'm here for you. Stay safe out there, and I'll see you in the next video.